Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello everybody, Ben Rains here today for top stock picks at Zacks. Today I'm looking at C.H. Robinson Worldwide, which trades in the ticker CHRW. So C.H. Robinson is one of the world's largest logistics platforms with nearly $30 billion in freight under management. The company provides freight transportation and logistics services, as well as outsourced solutions, information services, and much more to roughly 100,000 customers. C.H. Robinson provides access to what it says is 85,000 transportation providers around the world, including contract motor carriers, railroads, air freight carriers, ocean carriers, and beyond. Its revenue climbed 6% in 2020 and then a whopping 43% in 2021 to go from $16 billion to roughly $23 billion with that economic boom off those COVID lows. More recently, the company topped our Q2 earnings and revenue estimates on July 27th and provided upbeat guidance in the face of these growing economic slowdown fears. The company's Q3 EPS estimate is now up 20% since its release, with its fiscal 2022 earnings estimate now up 14%, and FY 2023 up 5%. And these are those Zacks consensus estimates. So that positive bottom line revisions activity is helping it land a Zacks rank number one strong buy at the moment. Zacks estimates call for the company's revenue to climb another 15% this year on top of that big year last year to get all the way up to about $26.5 billion to help lift its adjusted earnings by 35%. The stock has also topped our quarterly EPS estimates by over 30% in 3 out of the last 4 quarters. And it's been able to deal with some of the inflationary pressure that everyone's having to experience because of its non-asset-based business model, since it operates kind of that back-end logistical side. So some of its overhead and costs aren't as high. The stock is also part of the transportation services industry that's in the top 17% of over 250 Zacks industries right now. And it's been returning a ton of value to shareholders recently. This includes $340 million worth of repurchases just last quarter. And its 2% dividend yield currently tops the S&P 500's 1.5% average. This looks even stronger considering that the stock is up 6% in 2022 versus industry's 9% drop and the market's 14% fall. Overall, the stock has climbed about 110% in the last 10 years and 72% in the last 5 years to roughly match the benchmark index. And we should note that C.H. Robinson shares have ripped higher through both their 200-day and 50-day moving averages recently, and they just hit brand new highs not too long ago, currently trading at around $115 per share, with the stock up as I'm recording this on Tuesday morning as well. And despite that, the stock is trading at a nearly 50% discount to its own 5-year highs in terms of valuation. That's forward earnings at 15.2 times forward 12-month earnings. This is also well below its own 5-year median and not too far off its own lows. So with C.H. Robinson, investors are getting solid growth in a key industry, dividends, value, and we should know that it hit new highs even as the market sinks in 2022. So now that does it for me, and I'm going to send it over to Brian.
Well, thanks for that, Ben. This is Brian Boland, and I am the aggressive growth stock strategist here at Zacks Investment Research. And my top stock pick for the week is Yellow. Yellow, YELL is the ticker. It's a Zacks rank number one strong buy. And look at this, an A for value, an A for growth, and an A for momentum, and a VGM score of A. Straight A's. Something that I never saw when I went to school. I never got straight A's. I'd get an A for effort. That is about it. But let's take a quick look here. Boy, oh boy, this stock just had an earnings report, and boo, yeah, straight up we go. So let's just get into it a little bit here. So this is a trucking name, transportation services. Maybe not so much, the thing that you think of, but it's that less than a truckload, less than a truckload. So lots of logistics ideas in here. So these names were beaten down. If we jumped out a little bit longer on that view, you can see boy down, but maybe we have bottomed out here, and I think this is a great indication for the economy. Oil moving lower, obviously a big help, but here's the thing that really hit here. It's the earnings of the most recent quarter. Huge positive surprise. That was that was that miss that came back a little bit before, but you can see these beats. 220, 233, 228, and a negative 100. It's feast or famine. But boy, oh boy, could it be a big feast? Are we going to feast on this one? Let's take a look at the estimates. This is how we make that Zacks rank. So 42 cents up to 67 cents, 32 cents up to 45 cents, going the right way, 71 cents up to $1.30, and then next year $1.06 to $1.58. All those numbers moving in the right direction. And let's take a look at this. I mean, this is the one thing. The sales growth here is small, but these are big numbers that we're talking about. The consensus 5.4 billion in the quarter, or for the full year is the estimate. So let's take a look at the financials here, our valuation metrics, and we can see 5.7 times earnings, and most recent quarter, 8.4% top line growth. So growing a little bit faster in the most recent quarter than the analysts anticipate. So that you could see that full year number kind of start to move up. Other than we got a price to book that's negative here, and I think we're carrying a little bit too much debt, and that could be the reason for that. Let's see, a price to sales, very, very, very tiny. Very tiny, not even 0.1%. That's a difficult thing to handle. Margins, look at that. We're going from -1 to almost break even to just about 1% on your margins. That is a good indication that they've kind of worked things out and they're going to get better here. Let's go ahead and take a look at the chart. And we took a look at this before. Boy, oh boy, was this thing sloping down into that high cost of oil. That oil trade really crushed all the transportation trucking names. It just became too expensive for everything. The oil has started to back off, and now this stock is looking to head back higher. Now, of course, it just beat, but this is what we love about these names that just beat at Zacks. We like to call this the post-earnings drift higher. And when you get something like that, so you've got all the risk is kind of out of the number, but you can see that the stock has continued to move higher. And look at this level that it used to be at up here, in that range, 12 to 14, not too long ago. So is it very possible this stock gets back to 10 in short order? I think it is. Maybe not this week, but somewhat soon. And I mean, here we are sitting at 741. You got all the A's in the world, and the Zacks rank #1. This is going to be one of the best stocks out there. All right, that's it for this week for Top Stock Picks. Be sure to go to Zacks.com/promo to check out all of our most recent promotions.